Hey, what's going on, guys? We're here with Josh from the Dirty Degens.
How's
What's
it
up?
going?
Yeah, man, it's been a while since me and Josh did a stream, so we decided to get into it. Talk about some people's favorite meme coins. Straydog, we both got into recently. Chuck, and if anybody's got any requests or anything like that, we can get into that later in the stream. How's it going, Josh?
Man, it's going well. You like you said though, it's been a while since we've done this. We talked about making it more often, and then we both got really busy. Maybe we'll revisit that at some point in time. But always a pleasure to stream with you, Ron.
Appreciate it, man. Yeah, life's busy, man. I've been real busy with like just in real life stuff that I do lately
Yeah.
as well. Um, in this market, it just, this has been just such a tough stretch. Because I think what wears on people so bad is like at this point they think that BTC's done pretty well, but most people, most degens especially, they're holding alts. I was talking about this in my Telegram today, even, and that's what they're going to do, because you've been in crypto even for a while, like people hold some BTC, they believe it, they love BTC, but at this point they're not retiring early off of BTC, more or less. They don't have the money to do that, and they know alts is the way. And they think BTC's done well. Alts have not correlated to this point in the cycle, and then there's worries about is the top in or is the top about to be here, and how much alt gains can happen. So I know people are really stressed out right now.
Yeah, I was actually talking to some people in my community earlier about basically the same thing, not necessarily just about Bitcoin. I mean, that conversation's happened recently too, but people are really quick to panic right now. When anything like things have been going amazing, and then if it hiccups a little bit, they're very fast to panic because the greater market's not doing so hot, So I'm seeing that too for sure.
Yeah, and my opinion on that is, and why it's different than say like you're going through these swings a year 2 years ago or something like that. It's not too big of a deal, because I think now is when the gain should happen, and then their unrealized balances are lower than they were even earlier this year, significantly than they were earlier this year. So yeah, so I think that's why it's very hard for people to deal with now, for sure. I mean, I've been doing this a long time. It's tough for me to deal with.
Yeah, it can be. I mean, I don't know, man. For some reason, I'm just numb to it. But I guess I'm going on like what 7 years of full time. So like I'm just emotionally numb. It's gonna take Bitcoin going to like 4K to me, really start hurting. But I mean, it does get old. It gets annoying. I'm like everybody else too. I want to see the market do well. I want to see it perform. I want a blow off top bull run. I want to see alts go 4 or 5x everything, down the board. But it, sometimes it doesn't work out the way we want it to.
So I thought I had my X open on my computer, and I don't, because there's I wanted to share a link on X. I'm getting off my phone here in a second, but I came across this, and I don't know. I thought it was interesting, to say the least.
Sweet.
Yeah, and it goes to kind of what we're talking about. 1 second.
Not a problem.
But and I recently got into, we talk about this a little bit more in the stream while I look for this. I got into Straydog, and I don't ape into random meme coins and stuff like that, but I really did like that project, and you kind of put me onto it.
Yeah, it's not often that I hit up my friends and I tell them about a new meme coin, but this one I just couldn't ignore it, man. And I know we've got a bunch of Straydog holders and stuff listening in right now, so they're excited to hear from you, I'm sure too.
You know what? The community's been really active. Been fairly impressed with that, and something that I like about it. I mean, this is going to sound funny when I say it out loud. It's on ETH, which is almost like we forgot about. You can launch these coins on ETH, like everything's just Base or Solana and stuff like that. And they took it back, like, a good degen coin hasn't come out on ETH in a little while.
Yeah, I mean, there's been some, but they've all been flashes in a pan. There's so much liquidity on ETH that people are just ignoring. And, we're seeing people hop on these newer chains that are performing very well and that are very promising for the future. But the thing is that there's not a huge DeFi market there. There's not a lot of liquidity there. People are buying in, but they're buying in with like 20, 30, 40 bucks. And don't get me wrong, it's a super safe way to enter a new meme coin, but you also need those bangers that come in and drop a few thousand and stuff like that. And that's not happening on Sui, Avalanche, and stuff, right? So on ETH, though, you've got these new meme coins. Once they get over 1 million or a couple million, you got people dropping full ETH and stuff, right? Because there's so much liquidity over there.
Yeah. Whales, I mean, Solana has liquidity on the chain, but the stablecoin volume is nothing like it is on ETH. So, you know, I think people forget that sometimes about how, you know, ETH and a lot of whales, you know, they do the DeFi on ETH. So that's what they have the most of their, you know, like you said, lots of ETH and stable coins and stuff like that.
It just feels like they're hungrier too. They're a little bit, and also I've noticed, you know, my time, because I mean, you cover a lot of different things, and I focus pretty heavily on meme coins. I've noticed over the past like 2 years now of doing basically only meme coins that the big whales on ETH tend to hold a lot stronger than especially on Solana. You know, Solana, I always call it the typical Solana chart. You've got a token that has a blow off top and then it just fades into obscurity, right? And charts just hold better on ETH. It's that simple.
Yeah, big time. You know, I think for a long time we got just used like gas fees on ETH, and we got so tired of, you know, spending, you know, all this for a swap, and now it's not really an issue. So yeah, I think that that it was a good move to launch the coin on ETH.
Yeah, and actually gas hasn't been so bad. However, when World Liberty Financial launched, gas was like 150 bucks. It was a little ridiculous.
Yeah, I saw that did that. So, you know, that shows ETH can still happen on ETH. But you know, it's less likely. Okay, I found it. Let me copy it and paste it in the browser. I'm sorry. I just thought I have it up here on this browser, and I just thought that I had it logged on, and it had logged off, and since last time I had looked at it.
Not a problem at all. It's hard to get ready for these streams, man. People don't realize it, but it's hard.
Yeah, normally I like have notes and stuff like that. You know, we talked about this just today, so it was a little bit of an impromptu thing. But yeah, normally I make notes, and you know, all this stuff's time consuming to do it. And I like to stream, and I like to talk about markets, especially since a lot of people, you know, in real life, like my best friend in real life, he's kind of like a crypto whale, and I see him all the time. We talk pretty much every day. But other than that, nobody I know in real life ever wants to talk about this stuff. So I can get up here and ramble and talk about this stuff all day.
Absolutely.
So this post here, so I follow this guy, CryptoCon. I have for a while. And it's not that he's like somebody I think is like the greatest, but he's okay. He does a lot of like these macro type indicators that I'm not really familiar with. So I like to follow people sometimes that look at things differently than I do. And I was surprised when he had posted this. You know, yesterday I made the decision to sell off all my Bitcoin and altcoins as I feel the data has grown exhausted, which has shifted my perspective from bullish to bearish. I sold my Bitcoin and ETH or whatever. And he said a little bit more after that. And it was surprised because he had just been bull posting. And then I saw somebody have this post right here. And this word for word, like all these accounts are posting the exact same thing. And I wasn't familiar with all these other accounts, but I looked at them and they were legit accounts. They weren't just like bot accounts or something like that. You know, they had tens of thousands of followers and they were pretty big accounts, but they all posted, like worded the exact same thing.
That's super weird. You know what I do in that situation? The exact opposite.
Well, and it's like, who would pay them? Because I mean, obviously, there's no way that's a coincidence. No. Who would pay them to do that? I guess a market maker.
I don't. You know, this is a tough one because I do run partnerships and sponsorships for one of the biggest crypto brands in the space, as far as like KOLs though, and I have never gotten a request like that. So I have no idea who the hell would ask anybody to do anything like that, nor do I know who the hell would accept that.
Yeah, I mean, just to say you had sold, but then to have that script almost, they just like not even put it in your own words. Because even when I read it, because I followed the guy for a while, I didn't think it sounded like his verbiage even. And then I saw that post I just showed you later in the day, and I don't know, it just definitely makes you think that there's some kind of shenanigans going on behind the scene. And Dr. Prophet, a lot of people look to him. He's been bear posting heavily. And Dr. Prophet, I do like, because he has been right a lot. I give him more credit than most. But somebody in his paid group said that one of the reasons he's saying this is because of the phase of the moon.
Oh, is he dating Marin Altman now?
I think he said that before, like a blood moon. When a blood moon happens, the market will dump or something like that. I'm just bringing this up because these are like some notable people that people follow, and the bear posting and, stuff like that. And, some of the reasons I've seen, I don't really think are the best. I talked about some of this in a stream I did recently. I'll touch on some of it now. One thing that people point to a lot is a RSI divergence. And I'm not, I know about these things. It's not that RSI divergences aren't a useful tool sometimes, but if you make your decisions based off of that, you will lose quick. RSI divergences they'll lead you astray, in my opinion. I think that like when sometimes when people are looking for a case to like validate what they're already thinking, they really start digging into these indicators and RSI especially, and see what it can tell you. So, there is from this peak over here, if you want to say, it is a little bit of a divergence, but it's really not that bad. And there's a few other things. When I did the stream the other night, because people they post this picture, and then they post a picture from the last market cycle, from this to like this, and they're like, see, it's the same thing. In this cycle, we're just getting a bigger peak on the second run up. All right, so this isn't the same at all. And I did this figuring up when I did the stream the other day. So this one over here, this is like 540 something days at this point. This one was 300 days. It's a 16, I think, percent higher price gain, or 20% higher price gain, and a 16 less percent drop in RSI between the two. So it's like not an apples to apples comparison at all. One took place over a very long time. You're talking about almost 600 days over here between this and this over here. That's a long time. I don't know how relevant, it really is. And then when you take this one here, this one, you can say this one's too, this was more recent, but it's not that bad. This one to this one and this to here. I mean, sure, it's a little bit of a divergence, but normally those kinds, you just normal market pullback behavior. Like, that's not something that I freak out about, say, oh, the end of the cycle's over. And this other oscillator down here, this is something called MFI, Money Flow Index. And if you look it up, it is commonly explained as like a RSI and using volume as a factor as well. And somebody, when I first started doing all this and was learning about indicators and stuff, they told me, like, MFI is actually more accurate than RSI. And, that's debatable, I'm sure, whatever. In my experience, I feel it's been a little more accurate. But the only reason I'm bringing it up, and I don't look at a lot of indicators, but I know how to use them. So I'm addressing this to talk about some of the bear points that are out there. There was a divergence on MFI last market cycle, the same place here, kind of the same place. The peak over here actually came a little bit later in MFI. But now they're from this peak to over here, it's not much of a divergence at all there. And it is a little bit here, but once again, it's kind of like the same over here locally. Like, you're going to have pullback. So if you have a down leg in the market, I feel lots of times that's just normal pullbacks. It's not because of the RSI divergence. What a RSI divergence means is RSI is going one way and price is going the other. They're diverging. Once price starts going back the same way, I mean, some people say, well, the RSI, the divergence is reset, like it's not even valid anymore. So, I just don't think that that is a reason to say that the bull market's over and try to compare it to last cycle when they're not even an apples to apples comparison.
Yeah, I definitely agree with that. I mean, like, that's like creating a fractal but using two drastically different time frames.
A little bit, yeah. I mean, the indicators are on the same time frame, but the rise in price between the difference between the two, last cycle was more of a rise in price percentage wise, less of a drop on the RSI percentage wise, and this current one is over a very long time. So, now this is actually a little more concerning to me. I was looking at the daily. That's why I was like, I knew that MFI was I meant to look at the weekly. I was like, I knew that MFI was like not much of a divergence at all. So I apologize for that. I had the chart on the daily. So when you look over here, you do see this divergence, but on MFI, it's hardly anything. From here to here, it doesn't diverge at all here.
Yeah.
That's considered a minor divergence when price it goes one way and the RSI or the oscillator is flat. But last cycle, you see it's pretty, it's steeper. And like I said, it was more of a price increase, less of an RSI drop this time. And it's over such a long period of time. And, you do see this divergence on MFI last time, and you don't really see the divergence here on MFI this time. Now, the MACD, I think, is actually a little more concerning. When the fast line crosses the slow line, this is bearish cross. I mean, people know how to do this. So you're getting a bearish crossover on the MACD, and that has led in the past to some swing, and it's a divergence too. You can also take that. If it diverges like a lower high and price makes a higher high, that's considered a bearish divergence too. But it's still not like last cycle. Much more of a divergence last cycle. And now you got the cross, and that did lead into the bear market. Let's see, you got a cross here, and price just ranged. Nothing happened. You got the cross here, and that's when we had the tariff stuff, and price did swing down. So if you take a look at the last three, one was very bearish, bear market. One was a nothing burger, and the other one was a swing down. So once again, these two things, an RSI divergence and the MACD crossover and divergence, it's not an apples to apples comparison to the last cycle. So, I try to read candlesticks and price action and things like that. And I try to model myself after a guy named Al Brooks I talk about a lot in streams. And he says all these indicators are based off of price. So you might as well just use the price and not look at the indicators.
Right. Yeah. Do you ever look at and I'm just curious, I'm not saying you need to or anything, but do you ever look at like the bull market top indicators on like CoinGlass and stuff like that?
Yeah, for sure. But this cycle, I think that a lot of those won't get triggered. Like assuming the bull market goes on, then like pi cycle crossover, I don't think that's going to get triggered this cycle.
Okay, that makes sense.
And one of the reasons I say that is because if you go back and look at every time it's crossed, so in the earlier cycles, and I wish I had it on TradingView where I could just plop it up there. Let me see if I can pull it up on a browser quickly, and I'll show why I am saying this.
Sweet.
Okay, so let's see. We got this back. Is this 2013? Yeah, all the way back in 2013. All right, so it crossed, and the fast line spent a bit of time over the slow line. And then in the next market cycle, it spent some time over it, but not as much. And then last cycle, it barely crossed and just did touch. So every cycle, the crossover is like less aggressive, or to where one cycle it crossed and spent time over it. The next cycle, it just did cross and kind of hugged each other for a little while and then went down. And then last cycle, they just barely touched. So like every cycle, they're diverging. The like separation between the two of them is getting more, to where this cycle, I think it'll be enough that they're not going to cross at all.
Yeah. And also no, it definitely looks like it wouldn't cross too. We need a pretty bizarre breakout in order to cross there too, right?
Yeah, let's see where the top line is. So it's at like 190,000.
Yeah.
And if price pumps, then that'll go up even more. Now, earlier in the year, I did think that 200 plus was on the table. Now, I'm not overly sure, but I did a post about this the other day that no matter what you believe in, this time is different. And I know that's a dangerous statement to say, but no matter what the outcome, it has to be different. If you think the top is in now, then it was early with no sediment and 0 of the 30 bull market, like not a single one being triggered.
Right.
So that's way different. If we get the traditional 4-year timing, then I don't see how all these other macro things, like you'll get the timing and that's it. Then like all these other things, I don't even think sediment could build up enough in that time. I know sediment changes quickly, but that kind of enough for like a bull market blow off top like you expect, even if we had it in November, I don't think that's enough time for these things to mature and develop. Then if you go out in 2026, then okay, well you're taking a bit longer than cycles normally have. But I don't think that going out in 2026 is that much of a deviation as a lot of people make it out to be. Because in the 2017 cycle, a lot of these alts and stuff, they were really having their blow offs in January of 2018. And even last cycle, some alts were running into January having their all-time highs then.
Yep.
So even if it wasn't until March or April even, which I hate to even think about having to hang on that long, but I don't think that deviates too much. And I think that people think like the 4-year cycle either is or isn't, like a line in the sand. And I think that it's not so much like that. It starts to fall apart as, the market progresses in these things. And this is the cycle that it's falling apart, but it's not like a line in the sand. Like, nope, we were in the 4-year cycle model. Now that's completely invalidated and we're in completely uncharted waters.
Yeah, I think the lines get blurred a little bit because I think what people have to understand is yes, like fundamentals and things like that are changing a ton when you have all the institutional interests and everything that's rolling in, governments and et cetera. But at the same time, you do have a lot of whales and big players that are going to treat it the same as a 4-year cycle, no matter what. Like, I think it remains basically the same, except the lines get a little bit more blurred. And like exactly what you were saying, I'm on board with that.
Yeah, and the M2 correlation that a lot of people pointed to this cycle, I saw somebody point out that like once the ETFs happen, that's when it really started to correlate. Like there's some of that in the past, but because that's something that the TradFi is probably looking at a lot.
Exactly.
The first person I'd heard bring that up was Raoul Paul a while ago. But I heard in the bear market, Lynn Alden, she's a really smart macro financial person. She questioned if the 4-year cycle was because of the halving or because of global liquidity movements also. And I feel that when I've looked at a lot of these macro indicators, that ISM, the business cycle, has really lined up well, not just with bull market peaks, but just even local swing highs in the Bitcoin market. So with rates about to drop, that should help that ISM reading in the business cycle in the United States. That should facilitate that going up. And if I have to pick one of these things that I've looked at, like I said, I think that, it sounds, what does the business cycle in the US to, have to do so much with the Bitcoin top? But I guess when the economy's like good in the US like that people are more likely to take on more risk and get into crypto, I guess. But that's what it showed me, so I had to still weight the ISM a little bit more than some of these other macro indicators. And knowing that the rate cuts should help stimulate that, then that's kind of what I'm hoping that kind of my base case for now, that we extend into 2026 some, and that rate cuts stimulate ISM, the U.S. economy, something like that. And we have a fairly 6 months of good times in overall financial markets.
Yeah, I could see that. And especially with tariffs potentially being, outlawed now. So that could also impact some of the macro uncertainty that we're having too. and prolong, the bull cycle a little bit. I'm like mixed a little bit. I think that maybe we kind of see the 4-year cycle start to go away, especially as like all these companies are still coming out and saying like, we're going to own 1% of the Bitcoin supply. We know they're not going to get there, but they're probably going to buy a lot of freaking Bitcoin because that's what they say they're going to do. They all have short shareholders. They're a public company, right? So that's what they ultimately have to adhere to. Otherwise, they're going to be replaced by the shareholders. So that could play a slight hand, but I think for the most part, we'll continue to be in that 4-year cycle. I was thinking we would top around like October, but that was, in January. I think now probably like March or so.
Yeah, I don't think, and I'm open. I'm not married to this idea. I'm open to new price action unfolds and stuff like that. But I don't think we're seeing like high numbers for Bitcoin, like 200 and plus or anything like that. Right now, I'm thinking 140 to 150, something in that area. But the reason I say that is because when you look at these legs up from the bear market side. So when we broke out of, let me go back to the weekly. When we broke out of here, say this ranging period here, like not even counting coming off the bottom, breaking out from 25 to 30K. So this leg here was better than this leg here. Like the first leg was better than the second leg. And so the pullback on the second leg, you didn't even get one. So when I look at these things, I talk about gaps in the market. I talk about this a lot in streams that, wherever the breakout point is, which in this case, you could call it here, that does price come down and touch that, and how does it look when it does that? How long does it take? All those things. So here, it left a serious gap. No, it did not come down and touch the top of that range, the breakout point, whatever you want to call it. So the thing is, a lot of traders, they set orders there. That's the point they're looking at for it to come to, because they want a good price. They're not holding, for some kind of 4-year cycle. They're just going to work or their computer every day and they're trying to make money. Right. So that's what they're targeting, like a breakout point. So when it doesn't get there and then starts to go up, lots of them buy that and it helps the buy pressure on the way up. So here it left a gap. You didn't even get an attempt at the breakout point. Now here, once you got this leg, we did get a test of the breakout point, 21 weeks. So, close to half a year. And you look at where this wick came down to, exactly the top of this wick over here. And this is what I'm talking about. This is the breakout point. So it comes down, and this is a weekly candle. It was aggressively balled up. Long wick, even a green body after touching that breakout point. And it took almost half a year for it to even come down and touch that. Okay, so like I said, how this leg was a better leg up than this one. They were kind of close, but this one was a few percent higher gain and a lot more green candles. These are kind of better green candles, like fuller bodies and stuff. But this is 1, 2, 3, 4, 5, 6, 7, 8 green candles in a row. That's a lot for Bitcoin, a lot for anything.
Yeah, 8 weeks straight, because you're on the weekly. So yeah, that's a hell of a run.
So the way this leg was a bit better than this one, this leg was better than this one for sure. Now you're saying, so like the legs are getting shorter. And then we came down and touched the breakout point, and that was, say, I'm measuring from like when it made, say, the high to here. So 16 weeks, so 4 months. And you see where this wick is, came down and touched right at the top of this zone, like the breakout point. But also, you had a good bounce. You got green candles, but it doesn't look like this. It doesn't look that aggressive. It wasn't aggressively balled up like that. Good bounce, but it was weaker. And this is the point I'm getting at. Each leg is weaker. Each time it took less time in those two to hit to approach the breakout point, and then it was balled up less aggressively. And then over here, with this last time we broke out of this range, the breakout point was tested fairly quickly, like here, and that was 6 weeks. And you see, it did wick up on the weekly, but it did not continue up, man. We're still down. Right. So each leg is weaker. the breakout point is being tested sooner and being bought up less aggressively. So that is the number one thing I would look at a trend weakening. Now, it doesn't mean it's over, but standard textbook, candlestick TA or whatever, that shows that the trend is weakening.
Yeah, definitely. No, that makes total sense. I don't have a whole lot to add.
And so if we go up to 140, 150, something like that, that's not that big of a gain from here. 140 is 27% gain. So that's totally doable. That seems even likely in my opinion or something, so I don't think that calling for 140, 150 in this kind of range, that I don't think that's out of the question at all. And there's a lot of technical analysis pointing to 140, 150. Like if you take the measured moves off these bull flags, so many, like I think if you take this one to here and this one here, they both kind of point to like in between 140 and 150. So you have a few points of confluence. I think there's a Fibonacci extension level there too. So there's quite a bit of technical analysis, the confluence that's pointing to this like 140 to 150 area.
Do you think it'll take the 2 rate cuts this year to get us there, or no?
Rate cuts are definitely a controversial topic, and you're seeing that a lot right now on Twitter. Because some people are like, no, rate cuts are bearish. They're not bearish. They're bearish if you do them because of some like catastrophic event and like the world's falling apart or something like that.
Or like if you're dropping rates to 0, like Japan and stuff like that, there's total different circumstances for sure. But like for our market, US market, it's definitely bullish.
Yeah. It's like people with a lot of money, they can keep their money in like bonds or CDs. And if you have $100 million or whatever, and the bond rates, 4 or 5%, whatever, 4%, 4% of $100 million is a lot. Like you don't need to really risk that much. If you can get good yield doing that or whatever, but then when rates come down, then the bond yield, the rates should come down, and then it's more of that's when they'll pull their money out and put it into more riskier assets. That's just how they operate and how they play.
Yeah, I mean, when you're doing that much money, it makes sense. You go with something safe. It's like even during a bear market, even I put money in USDC, right? So they get what the 3.9% or whatever, right? It just makes sense. But yeah, it makes sense that big money is going to wait for rates to drop. Otherwise, it makes sense to stay in the CDs.
Another thing, I'm seeing a lot of stablecoin printing right now.
A ton, crazy amount. There's like 4 different chains that stable coins are at an all-time high on. And I think that's incredibly bullish. I want to hear your thoughts, though.
Well, I think it's one of the best bull market indicators that you can look at is the stable coin, up, up, up. And I have this label. I refer to this chart sometimes. This was the Luna collapse. This was the FTX collapse. This was the like breakout coming off the bottom. So there's definitely a correlation to this. And look, this big one right here, that was when like last November when Trump won the election and markets pumped up to 100K. Definitely a correlation here, and it's just continuing the green bars up. So I think that as more stablecoin liquidity comes on chain, I mean, that's what it's coming on chain, like buying crypto and investing in crypto and things like that. So, I think that's a great sign that that we're seeing so much, stable coins being minted. And I think with all this regulation and Tether being a lot more legitimate, like they're having legitimate partners now, because for years and years, people didn't really trust Tether. They thought it was shady, and it kind of was.
Oh, yeah, definitely.
I think the risk of stable coins depegging now has significantly went down.
Yeah, I think everybody got the point that algorithmic stable coins are not the way, and stick to what's working and just go with that. I haven't seen Tether FUD in months. I don't think I've ever seen USDC FUD. I'm shocked that I haven't seen any USD1 FUD from World Liberty Financial. Like, stablecoins just don't get FUD anymore.
Yeah, and we're in more of a bull market atmosphere. I think a lot of the fear on stablecoins depegging is more, a bear market environment. In the bear market, USDC actually, if I'm not mistaken, depegged briefly.
Yeah, it did.
Yeah, and people thought USDT was the one that was more of a risk. But that is scary because a lot of people they want to roll their profits into stablecoin. They don't want to cash out into the bank necessarily. They kind of want to, hold and see what happens, maybe buy Bitcoin at the lows in the bear market or something. And that is a risk. That's something worry about is stablecoin depegging. So I think that's a really good thing with all these stablecoins coming online and these big institutions and stuff wanting to make their own stablecoins. I think it's less risk for stablecoins depegging.
Yeah, I agree. I don't think it's too much of a concern as long as we don't. If USDC is randomly like, hey, we'll give you guys 25% APY, run for the hills. I think when you see crazy APY on stablecoins, that's when it's gonna depeg and go to shit.
Yeah, people aren't even talking about living off staking rewards or anything. Now, it doesn't mean that there's no law that there has to be some kind of retail FOMO, section of the market. Like, there's nothing that says that has to happen, but generally it does. And not just in crypto. This is a story that's old, that they try to get retail in the market and get them to buy everyone's bag. So we should get that. Like I said, if we don't, then this cycle was so different. You almost never even had a chance, especially if you're an alt degen.
Yeah, what's interesting about this cycle, really, we're in a bull market. It's very apparent, but compared to the last bull market, especially, projects are not releasing news or doing marketing or anything like they were last bull run. You used to wake up and you had 100 new articles about every project, about a new announcement, a new partnership, a new person's talking about them, anything, under the sun. This year, it's literally nothing. We had like 2 months of a healthy amount of announcements, but nothing like before. And so it makes you think that there's a lot of pent up, announcements and things like that when market temperature is really, they feel like it's really right. And that's what drives the FOMO. Like, oh, we're partnered with Adidas now. Like, we don't care. We know it's BS, but retail, they're like, wow, that's a big deal,
Yeah.
And I think that's kind of what drives that. And we haven't seen any of those type of announcements that are like the BS announcements. We're sure they're kind of doing something together, but it's with a big name. And that's what I think drives ultimately retail FOMO. Seeing price go up, especially with Bitcoin, as somebody retail that's maybe been interested in before and like, oh, I missed the boat. Then they see it go up to 120K. They're like, well, yeah, now I definitely can't afford it.
I feel that's kind of what gets them to look at the market, and then they realize they kind of missed the boat on Bitcoin. But if I buy some of these other things, the altcoins, then I can still make a lot of money. And you gotta have regular people becoming millionaires. You got to have some of that, because then the other regular people see that, and that's what makes them want to buy the altcoins. Dogecoin last cycle probably got so much Doge and SHIB, got so many people into crypto to buy the top last cycle.
Yep.
And there's BTC dominance, and I know there's some bigger influencers kind of calling for, BTC dominance to pull back to the upside, but kind of when you've had it to start to dump, generally it keeps dumping, once you're at that point in the market cycle. So, I'm hoping that's what's going to continue here. I had this point right here highlighted because this is the October 23 to March 24, around that time period, where alts were going, massive gains. 100x's were coming out all the time. And look at Bitcoin dominance didn't even go down much, and the reason I'm saying this because Bitcoin dominance is a great chart to look at and refer to, but this is not people don't even trade this. It's the reference to, and alts can still do gains. That is proof right there. Alts were doing crazy gains right there, and Bitcoin dominance was just ranging. It wasn't doing anything.
Yeah, it really takes these big caps like our projects in the billions to start heavily moving in order to really affect Bitcoin dominance. Like when you see a meme coin go from 0 to 100 mil or whatever, that really doesn't impact Bitcoin dominance at all. So It really takes these bigger caps, I think, anyways, to move the needle. Which we've started to see. XRP came up. You got ETH coming up. Sol's finally recovering up. SWIG moved up a bunch. So like that's when we started to see Bitcoin dominance start to get dragged down. And we're not seeing a lot more of that though, and it's kind of stopped for the most part right now for the time being.
It's paused a little bit, but that's kind of how anything works. It's not just going to be a straight line down. But when you look at the past, when it reached this point in the cycle where dominance dropped aggressively, it wasn't like a rangy leg down. It was like a trend down. It went down pretty hard.
Yeah.
So I don't have a second X account. A few people reached out to me about that. Somebody made a scam account today, just reported it or whatever.
Hey, that's when you know you made it, Ron.
I don't know about that. But yeah, definitely. She put that when we were talking about the Twitter thing I showed with those people and stuff. So definitely something going on. I don't know who pays those people to do that. I would assume some market making Wintermute, or I don't know. But it's definitely suspicious.
I didn't catch that. I had seen something in your community about that, but I didn't look into it much more. But it's super sketch.
Yeah, weak legs. And it's not that they're weak, but they, I think I showed like they get weaker every time. And that's, I didn't come up with this concept myself. I learned it from people that know a lot more than I do. And they call it like a stair step. And as the steps get lower, like that's how you know the trend is weakening. But an up move 30%, I don't think that's still on the table from this, but going up to 230, which I thought was the max Bitcoin could go this cycle, I don't see that unless governments get involved and it's just like mega bullish type of super cycle, and that would be an outlier. So I wouldn't advise to bet on that. But at the end of the day, TA is just probabilities. It increases your probabilities. It's not a holy grail. It's not a for sure, because of things look a certain way. That means without a doubt something's going to happen.
Yeah, I don't know. What's your thoughts on it? Because I've talked to a lot of different traders and people that are heavily TA, like yourself, and a lot of them are anti-news or anything like that. All they care about is what the chart says. They don't care about like, there's a rate cut coming soon. They don't care that, the so-and-so is about to partner with so-and-so. They don't care about any of that. Like TA says this, and that's all that matters.
Yeah, and I try to be that way. And that's why I'm not banking on like the scenario I just said. And that's that's what I think, that the leg for Bitcoin is exhausting itself, that it's weaker, because that's what I would look for. And then you got some of these indicators and like these divergences and stuff like that. Not that they scare me to death or anything like that. And sometimes they can take a while to play out, but they could be contributing factors. But that's what happens to people sometimes that trade off divergences. They'll use the divergence as like the main reason why they get in, and then it's a divergence until it's not. Like the point, it can still keep going up or price or down, whatever the case is. And still, when you look back, it'll look like, well, price went down and the divergence played out or something like that. But it can still have another rally up or down or whatever the case is. And another thing I brought up, so if it wasn't an RSI divergence, and that means the RSI would be at like 80 or something like that, then the case would be like we don't have much to go up. We don't have much room to go up because the RSI would already be overheated. So you can't have it both ways also. Same thing with the MACD crossover. It can only go to so high. So if it wasn't a divergence, it would already be kind of high and it couldn't go much higher.
That's true. Very true.
So at this point, I think all seasons like my dad going out for milk. We all hope he's coming back, but it's been years and Bitcoin raising us now. I'm sorry your dad did that, but hopefully alt season will still happen. I still think it will. I don't think it's a slam dunk. Maybe some of these people are right that there's too many alts or whatever. I think, if you focus on like the top 1,000 or so, a lot of my holds are like in between the 350 to 700 range. I've always felt like that's the sweet spot. So last cycle, there was well over 1,000 coins. And, if you just look at the top 1,000, you would have done fine. That's where the gains were. So even if you like lower on the totem pole, and one thing I talked about before, when you look at some of these coins, just say you pick just some random shit coin that from last cycle that when you look at coin market cap, it was flat and then spiked up and then continued, flat, and it's been that way ever since. Just because some of these lesser known projects, you see that on chart, it doesn't mean that a whole bunch of people became millionaires off that spike. Like there's a lot of things that go into it, liquidity and tokenomics and stuff like that. And it could have spiked, but been very brief. And then like one or two people sold a decent amount and then they just completely crashed out and that's all they had, so it doesn't mean that every single alt, they may have went up last time, but it could have been very briefly and not very many people made money off of it.
Yeah, absolutely. A lot of people forget about that, about liquidity. A lot of people get that confused with market cap. I noticed that all the time. They're like, oh, well, there's $15 million in it. Why can't I pull 100K? Because that's not how that works.
For sure. And that's something I'm very aware of with crypto, and I preach in Telegram a lot is, look at liquidity, like the liquidity pool. It's like some projects that I like Astra AI and LBM, Libertarian. So it's like an RWA project on base. I like those projects a lot, but the liquidity pools are thin. So like my expectations is why I wouldn't have them like one of my main holds, because I have to adjust my expectations on what my gains could be from that. Because they have a thinner liquidity pool, Yeah. I mean, if we, mania phase and they're listed on exchanges and there's lots of volume, then you can kind of get in there and, it's changing hands and you can get probably a good realized value, but, I can't bank on that. And I just feel like, some of these other AI projects with big liquidity pools and more volume, that's a safer bet if I'm targeting bigger numbers. But that with LBM and Astra AI, they can still do great gains, but that I don't want to put too much eggs in that basket because I know the gains are most likely limited due to their liquidity pool.
Absolutely. Great insight.
So I'm gonna look up Straydog.
I think there's some strays in the chat too.
I'm sure, I've been pretty impressed with their engagement, like their social engagement. Well, I've done a few posts and they've come out pretty hard. Reminds me of Chuck, especially in the early days. With Chuck, and I'm gonna look at Chuck too. Chuck still rating pretty good.
Oh yeah, Chuck community never dies.
Yeah, we'll definitely still talk about Chuck. We'll look at this first. So, and when I first put it out, it may even be somewhere around the price it is now. Because this is what you see a lot of times, a run up, and then people don't want to chase it and feel like they're FOMOing. So I advise, I put out like maybe if you want to get into it, put in half now and then wait for the first pullback, and maybe put in the other half of your funds that you want to throw into it. And look, yesterday around lunchtime, like maybe we're breaking out and closing above this because it can keep going. I mean, that can happen too with these things. Because from what I understand, it was kind of done in a fair launch manner. So that definitely helps, but we didn't get the daily close up there. So no big deal, so you're kind of getting that pullback right now. So, if you like the project, it's not a bad price at DCA. I would probably wait for a little bit more of like some reversal signals, knowing that this could be the first pullback, and then jump in there, when we see some kind of, wedge pattern or something like that. And that might be a good time to bag up on Straydog.
Yeah, it's definitely looking good. I mean, they've had a lot of good stuff happen. The dip is largely caused to. There's been a couple of people that have managed to extract like $37,000 out of the project, right? And of course, you're going to have people do that. It's just, can you keep the momentum after that happens? But I think that they will. I'm not sure if you caught it, but they also had Shib in their spaces. Shib is talking about him and stuff now too. And I think there's some other stuff coming. So like the future looks bright, but you're definitely right. That chart reminds me of when I first saw Chuck and I was like, this is a chart. Like this is the chart.
And that's what Chuck, went up and then got a kind of a pullback and hovered there for a while and held the support and then had that massive leg up. 3 million market cap, 224K liquidity pool. That's not bad, especially when it comes to meme coins. That's not bad. a lot of these meme coins are super thin, especially on Solana.
Yeah, no, definitely on Solana. And it's like it's like 10 days old.
Yeah.
So not too bad there either. But yeah, I mean, I do like to see like a 10%, at least 10% of liquidity in there. But yeah, it is still pretty fresh, but at least it's not as thin as what you see on Solana, that's for sure. Because everything that comes out on Solana now is pump fun, right? So
yeah, I've only launched one coin on Solana, so I'm not, as familiar with that. I've done more on base, but when it comes to liquidity, like people that don't know this, what's in the liquidity pool, this is in this case, Straydog token paired with ETH. And that means in this liquidity pool, there is $112,000 worth of ETH. So, and I'm not picking on Straydog, I'm just using this as an example. I'll talk about it with Chuck too. That means there's only, if you max extract it, if you completely rug the project, you're not getting 3.2 million. Matter of fact, you're not even getting 224,000. You're getting 112,000 in ETH.
Yeah.
And that's something that people in crypto, they know what market cap is, and they think that everything is based off market cap, and it's really more, or it can be more, about the liquidity. I mean, market cap definitely matters, and that's what the math is based off of buying and selling, but what's actually there to be taken out. And that's why some of these meme coins especially come out and you think that it's a low market cap. Well, look at the liquidity pool, because those gains, because I put out like MAM AI when it was at 15K. They ended up rugging, which like 8 months after I put it out. Matter of fact, I hadn't tweeted about them in like 3 or 4 months when they had rugged. But then a lot of people, it went up to $2 million market cap, and some people were like, gosh, I wish I'd have bought more when it was at 15K when you first put it out. I missed out on this 100x gain. If I just would have put $1,000, I'd have $1 million. I'm like, no, you wouldn't. The liquidity wouldn't have been there for you to make $1 million off this token. Like, so don't beat yourself up about it. That's wasn't there to be gotten.
Yeah. Yeah, no, not at all. But, it's like a double-edged sword too. Like, it's nice to have a thick liquidity pool, but you'll also turn it into a stable coin.
Right, because people want the pump, and this is Chuck. So actually Chuck has a bigger liquidity pool than Straydog at $1 million market cap right now, 233K. And Chuck, that has been some of the criticism, is that people like the liquidity pool is too thick. But also, if you're a whale or somebody with a lot of money, that's one of the first things they look at. They're going to look at that and be like, making sure that there's money to extract out of the project. So, what I see with Chuck right now, consolidating in this pattern on the daily, and with all these altcoins, I always say, what Bitcoin's doing, what ETH's doing is going to matter greatly. But, this is a nice consolidation pattern, in a triangle. So, based off the measure move from this, if Chuck breaks out to the upside, that's good. That puts us, I think, over this kind of range, or right there at it. Yeah, right here, which is because it stayed at 2 million, 2.2, 2.5 for quite a while. That's definitely a level for Chuck. Nice rounded bottom. You could even say if it went up here, that would also be a cup and handle. And the measured move off of that would be pretty high up there, If Chuck, go ahead.
No, I'm agreeing. I've been waiting for a good Chuck pop. As a matter of fact, I think as you're drawing that, I'm sitting here thinking, man, I should throw in a buy. So let's throw in a fat, $600 buy on Chuck. Right?
Yeah, let's do it. So Chuck, the thing is, because it went up so good, when it crashes fast like that, it doesn't build up such much market structure. So if it just gets above here, somewhere in this range, it's almost like it's in price discovery again, because you don't have levels of resistance up above it.
Yep.
And we got some stuff coming out for Chuck. I don't know when we'll release it. I won't say what it is, but it's probably the best thing that we could have done. What's that?
Give us the alpha.
I mean, I'll say this: it's probably for something to spend some funds on for development of the project and stuff like that. Because on Chuck, we do a lot. I mean, I don't know another meme coin that does as much as us. We do the burn lotteries. We burn over 100 million tokens at this point. We've been doing buy and burns. We got the merch store with all kinds of stuff, including stuff that it's all run by the community. Energy drinks, beer from Germany, chocolate from Switzerland. Lots of good stuff we got going on there. And then all the money, not that we're making a ton of money off the merch store, but any money from there goes to buy and burns. And look, there he is.
There it is.
There it is.
I had to wait for the bridge to go through.
But yeah, anything from that we do buy and burns with. We do the burn lotteries, which people send in tokens and some people get rewarded, and then a third of it's burned, and that's always a lot of fun to do those when we have the time to host those. We still got the Chuck game. I don't know if people are playing as much now with things calming down, but we have a game. We have a trading bot. We're coming out with a tutorial video about that soon, but we have a Telegram trading bot as well. The Chuck website is just really good compared to any project. I think if you look at the Chuck website,
everything around Chuck. I mean, I'll toot your horn for you too. I love Chuck. I've loved Chuck since I first saw it. And I think that, you guys do an amazing job with it. The community is top tier. You guys have done so many different creative things, like you've already mentioned the beer, the energy drink, the game, all sorts of stuff. And it's just nice to see you guys keep working at it. And yeah, you could have given up over the last 8, 9, 10 months or whatever, but no, I mean, burn lotteries are still happening, still developing new things. I think it's all amazing, and the branding around it is just amazing too. So kudos to you, man.
Josh. Yeah, you've always been a supporter since day one, and yeah, we've tried everything we can. When you're in the meme coin game, people Pump Fun and Solana, all these things, they kind of fried people's brains where these things come up and they're just all in, all crazy when it first comes out, and then they have a dump. And in the meme coin game, it can be hard to get that momentum back because there is so many meme coins out there. But Chuck, we feel like we're an OG base meme coin at this point. Some of the other ones that were with us, like similar in the beginning, they've completely fallen off. Chuck is definitely still around. We're listed on a couple of exchanges. Biconomy, that's an exchange that you can use in the U.S. even legally or whatever.
Guess where you're about to be listed though?
Coinbase.
Coinbase. Yeah. That's the bread and butter right there.
Yeah. And I know it's not like an actual Coinbase listing, but, when people ask, every time I've always dealt with, like, you tell somebody about some new crypto or something like that that's not overly familiar with the space, but they know a little bit. They're like, oh, can I get that on Coinbase?
Right.
And now you can say, yeah.
Yeah. No, that's huge. Like, it's tough because, like, do you launch a token on Solana or on ETH, or like, well, you can launch it on Base, but there's not a lot of liquidity. But hey, you get on Coinbase,
Yeah, and Base has, it continues to trend in the right direction.
Definitely.
So I still believe in Base, but like I said, Straydog, I think it was smart to do it on ETH because the liquidity on the chain is the highest, and then so much focus Solana and Base. We'll kind of forget about ETH, where all these whales park their money at. And with gas fees going down, I mean, I know we had the exception yesterday, day before, World Liberty Finance or whatever, but generally speaking, the fees on ETH, I was thinking about this just a couple of days ago. I had to send somebody some funds, and they sent me an ETH address. And I was also at the same time moving some funds to another exchange. And the address I had saved to that other exchange was on Tron, and it cost me $1. That was like a flat fee, $1. And then when I sent the ETH, it was 67 cents. And I was like, I never thought that cycle that Tron would be more expensive than ETH, because ETH was, Tron was the thing. Tron was the cheap option to send USDT.
No, definitely. Lately, a lot of times, like, ETH has been really cheap. It was actually kind of crazy to see it the other day, where it's $150, and like you saw it in Straydog too, because Straydog was, at the time, it was pumping hard, and then World Liberty Finance launched, and there wasn't a buy or sell for like 4.5 hours because nobody wanted to screw around with those gas fees. So it does have an impact. It's not like 2021 where people are willing to spend $800 on gas fees, you know.
Yeah,
But
for sure. And that's why I thought, it was going to be if ETH hadn't done something about those gas fees, I don't know that they would be able to come back and compete against Solana at all. Long term, I still like Solana way better than ETH, to be honest with you.
yeah, I mean it's a bit centralized. They're still, you know, I like Solana too. Don't get me wrong, but there's definitely issues. You know, centralization's one. Their validators are still being paid for by the foundation. You know, they're losing money for sure, but they're making good revenue now. So maybe that'll help fix it. But I don't know if they want to be truly decentralized either. They might not want to be. They lose control and all that. Like everybody was like, "Oh, is the App and Glow upgrade gonna go through?" Of course it is, because the foundation runs all the validators. Of course it's gonna go through.
Yeah.
And it's a good upgrade. I think Solana's going to do amazing. I wouldn't be surprised if in 5-10 years Solana is bigger than ETH. You know, but
I think they have more of a streamlined plan and team and such. So they have a focus and a goal like what they're doing with ETH. It's just, I don't have as much confidence with the ETH team at all. And yeah, and I also read a thread recently of like a roadmap to Solana decentralization, which they argued that it would actually be more decentralized than ETH, like in the not so far future.
it's probably a lot cheaper to. It's probably going to be a lot cheaper to run a node or a validator on Solana, because like with ETH you need what like $90,000 to run a validator.
Mm.
You know, so it's hard to get highly
I
decentralized.
think it had something to do with that they have so many more nodes or something.
Yeah.
And just locally with the Bitcoin price, because we talked about some macro things and stuff. We're kind of in the odd thing about right now, we're kind of in between these two zones. And I'm not just drawing boxes on the chart. I go in this upper zone. I was going by the candle bodies pretty much here, and the same thing here. I mean, the whole range extends lower, but this is the area that I knew you would see. This is where it needed to hold up at, because there was a lot of price transactions here. And I've talked about this in streams before, 106, like if you go down to smaller time frames, you could not get, like when you had these highs over here, you could not get closes on higher time frames, even barely on lower time frames above the price of 106. So I know from that up to these highs, this is an area of high volume and congestion and so forth. So this is kind of where it needed to hold at. And right now, the weekly looks pretty good. Even if we don't pump, I just want price to melt up a little bit into the weekly close just here. I don't want it to go down anymore.
Right.
And I posted, like I think last Saturday or something in Telegram that I thought up was more likely than down. We have seen that now. And the reason is we have this wedge pattern. You get 3 clear pushes down into this area that we're looking for. You also have this trend line here that could add a little bit of dynamic support. If you go to the weekly, there's also the 20-week EMA, which I know there's some big YouTubers out there that talk about bull market support band, which is a 20 EMA and SMA, but it really hasn't been respected that much. If you look here, I mean, it just cut right through it back and forth. I don't think it's shown to be that important of a level of dynamic support or resistance, but it's a EMA 20, any 20 period EMA is going to provide something. So you got that providing some support. You still have this trend line here. So you get a somewhat of a bullish pattern going right into this area that I was looking for. That's what needs to hold up. I think the fib might tell a story too. We take the fib level. So yes, right here, the 38.2 fib level. So that adds a little bit of confluence, some more buying, some people that go off of that. So all things considered, I did think up was more than down. Now that doesn't mean we continue up. I hope so. The better this weekly close, the better it will look on chart for traders, because you don't want to start a trend down. That's the thing. You don't want it to look like a trend down. And I don't think it does. Now, after this candle is a little concerning, but there's also a saying that big candles start and finish trends. So that was the big candle that started it. That could be the big candle that finished it. And some of these things that I look, I'm looking for how the leg looks. I'm looking for how the candles are constructed. And it looks like more of a rangy leg down than I'm looking at it like it's a range price action. And when you get to lows on a range, the probability is that it will reverse. Now, maybe not immediately. It might chop around at that bottom a little bit, but the odds are better that it's going to reverse either up or down, no matter, depending on which way it is. Now, if you're getting more like trending price action down, and the things I'm looking for there, consecutive bars of the same color, not a lot of wicks, not a lot of bar overlap. And ever since here, like you have a ton of bar overlap here. Like all these bars from this last one, like it overlaps like 9 of the last 10 or something like that. So that's not trending price action when you get 9 to 10 bars on the daily overlapping. The weekly doesn't look great. The double top, both long wicks up. That's not good. That probably would tell you're going down to the bottom of the range after this candle. It doesn't take a TA genius to think that. And I really think that whale who sold the 2 billion on that Sunday night, he checked because this candle was like up here before he did that. We were looking pretty good for the weekly. But when he did that, he kind of changed the structure. I know he put the money into ETH, but I feel like if that hadn't happened, we may not have got this candle. I mean, we may have it. You can't say, but the weekly was looking pretty good then. So you're still getting. Let's see how many bars overlap we have here. 1, 2, 3, 4, 5. So 5 of the last 6 bars overlap on the weekly. I don't know. And all of these up here overlap. Not really trending price action. If this would have closed down, and it did close fairly towards its low. But that's why I was a little concerning. But once again, we're in a bullish pattern on the daily, the falling wedge in an area that we expected to bounce. If you got continuation after this and like a red candle, even if it was like small, like if it looked like for this week, say this candle, pretend this green one isn't here, and say it opened here, and you just got even a small red candle like that, that would have been bad. That would have been like, okay, we may be kind of like you're starting to see more like trending because it breaks a level and then you get the follow through. And especially there's not a ton of wick, even if the body is small, then that can be a bad sign. But we didn't get that. And there's more, the resistance is less to the upside than there is to the downside. There's a lot to chop through down here. All these levels of price action, all these EMAs. It's a lot to chop through for bears to want to put that much effort in to push it down. Look at a heat map, which I'm not sure if I have my logged on right now. Oh yeah, I am. There's more. I hadn't looked at it today, but there was more yellow to the upside than the downside. Now it looks fairly close. This wasn't last time I looked at it. Some of this wasn't as strong down here, but it's still plenty to the upside. I don't know what these levels are just because of the color. So the actual dollar amounts may be more to the upside. And one more, little bit of a bullish thing to look at is the CME gap from here to here. There's a CME gap that's right there, and those tend to get filled. So that's to the upside. So that's another plus.
Yeah, we've been hitting the CME gaps pretty fast recently too.
Yeah, this one hasn't been hit, and I talked about this in the last stream that I did, like these CME gaps. So, and for anybody who watched that, I'll just say the explanation again because I'm no CME gap expert, but I looked into it a little bit because this is the weekly, But if we look at the daily here, all these are CME gaps. On the daily. And I'm like, well, how is it? Because I think it's common knowledge, people know the CME exchange shuts down over the weekend. So if price pumps on the weekend, it leaves a gap or whatever. So I was kind of like, why is it these gaps on the daily, but they're not there on the weekly? And this is something I actually didn't know is that the CME closes down for an hour a day between like 4 to 5.
Yep.
And I didn't know that. I mean, I don't trade on the CME or whatever. I'm not, I know what CME. I know what CME gaps are. Not anything that I've, no expert on. So, but the theory of why it price goes back there, it's like an imbalance thing that people say, like, it's a lot of volumes done there, and they didn't get a chance to buy this level. So it's like a natural market balance thing for it to come back and fill that gap. So based off of that theory, and any site you look at that talks about a CME gap, it refers to the weekend price action. So I don't think because it closed down, for an hour on a Tuesday afternoon, that fulfills the theory that it needs to come down and close these CME gaps. You know what I mean?
Yeah, no, I agree. And I mean, who knows? Like they considered if you fill it, 8 months later, well, you filled that gap. It was going to happen. I told you it was going to happen. So
yeah, and they don't have to get filled. Like this one, from like 2020 or something like that.
yeah,
Like it's sidelined a lot of people. People thought it was coming down to like 9,600, and they stuck to their guns. They're like, nope, I'm not buying. I'm gonna let it fill the CME gap, and they got sidelined the entire bull run, waiting for that stupid CME gap.
yeah.
So hopefully, we don't get that situation here, and the top's in, and this doesn't get filled, and it's put a lot of people bag holding. I don't think so. I haven't even heard much talk about the CME gap on social media.
No, it's been a couple weeks since I've seen a lot of chatter about CME gaps, but it's typically like the ones that happen over the weekend, people tend to talk about the most, that I've noticed anyways. But yeah, I think that they're stupid, but hey, they do seem to fill a lot more often than not anyways. But
how was the MK liquidity pool? So I'll look at it, but one thing about MK, it's got a lot of volume on exchanges too, so that helps out a lot with that. When you got a lot of volume and it's being widely traded on exchanges, but I will look at the MK pool.
yeah, my what I always try to tell people is like, hey, if you got a big bag you're trying to dump or something and it's traded on exchanges, go dump it on the exchange. Like,
if you get the order picked up or they have market orders, then yeah, for sure. So MK has pretty good liquidity pool, and I'm glad Josh brought that up because, and I wanted to make a post about this. MK, where you at? Okay, so I put out that on the weekend when I last stream, I said after this candle, I said not looking good. I think you're going to come down and get more down next week for Medicaid, but if we hold this zone, looks really good because what it would be forming is a really nice, potentially a really nice head and shoulders, the right shoulder, like a nice pattern with this level of 022, 223 for Medicaid. Been terrible resistance. It does, definitely, resistance there.
oh yeah.
So broke out at the bottom of that zone there, which not optimal, but that's okay. Sometimes you have to go lower to go higher. Got to find more buyers and shake some of the hands out, some of the older holders that maybe bought at a lower price, and then they get out, and then new people get in, and that's how this whole thing continues to go. So it is forming a bullish pattern that if it comes up here, that should help it break through this neckline here, and that's where the measure move for it would be. We're firmly, an all-time high. Medicaid, I'm sure you feel the same way, Josh. There's just so many good things about Medicaid. And one of my theories with Medicaid is that gaming's been a bit disappointing this cycle. So Medicaid, the community's happy with it. Like they've done pretty, the price is going down right now, but they've done pretty well this cycle. Like, this area up here, that doesn't look like a lot of charts. Even AI coins, especially AI coins, actually, it's just been a down trend for a long time. There's been no life, nothing to really get excited about, and they're just always doing so much, anything that they can to improve the project. So I love Medicaid. It's one of my biggest holds. Assuming we continue to go up, I think that Medicaid will be a winner.
Yeah, no, I'm right there with you. I think Medicaid's an amazing project. The team is fantastic. I've had the privilege to meet a lot of them too, and they've got a lot of different things going on. I know that both of us are in Club Cade. That's something new that's going to help bring a lot of attention to Medicaid. So like the thing is gaming, Web3 gaming is just not hot right now. So it's like when it's time, it's primed and ready to go.
Yeah, they've held in there. And one reason I've loved Medicaid from the start is the tokenomics. They're fully diluted for the market cycle anyway. So all these other gaming projects, they dilute tokens like crazy. And, I understand they need that, that's kind of the concept. They sell the tokens and use it for the development. But, Medicaid, you don't have to worry about all that. Danny, the bull in the house. What's up, Danny?
Hey. Yeah, not only that, but like a lot of gaming tokens, especially, are not capped supply. So like they heavily inflate the supply over the course of time, which Medicaid is also capped. So like no, they've got fantastic tokenomics.
Yeah, and that's what set one of the main things set Medicaid apart from the beginning. But when I found it the day it launched, and I just liked the website, I liked what they said. I was really intrigued with it, and I kind of call myself the original MK chiller. I was the first one. Search on social media, you won't find somebody who was posting about it before I was. So yeah, I'm glad I found it and still believe in it. A lot of these stray dog, rating the comments. Chuck folks, they gotta get back in the game. You can't let stray dog can't get beat by a stray dog, Chuck.
Hey, there's enough there's enough room in the streets for two dogs.
Yeah, for sure. And different chains, yeah. I wish if Stray Dog was on base, I could get him on a Medicaid game. But I think I don't think they could do it with ETH coin. I think they definitely lean into the base narrative really hard.
Yeah, they're super hardcore in the base ecosystem. Even if they could, they probably wouldn't.
Yeah.
But that would be cool. Hey, you never know.
Well, I see we've been on for an hour and 15 minutes now. Honestly, I thought we'd been on for like 30 minutes. Like I said, I can ramble about this stuff indefinitely, pretty much.
I'm right there with you. No, we'll have to make these more consistent. Maybe not every week, maybe every other week or something like that, or every week. I'm open to it, but I know you're real busy. I'm real busy. I mean, hell, this is the first stream I've had the chance to do this week. So I try to do 5 a week, but life's been crazy. So, but no, man, thank you for having me on. It's awesome to see all these people show up. Awesome to learn from you and hear what you have to say. I always appreciate and respect what you have to say about the market. So thank you.
I appreciate that, Josh. But if anybody doesn't have any more charts or alts they want me to check out, then we will call it a day. And Josh said he's busy too, so that's good to know. All right, guys, we'll go ahead and wrap it up then. I hope everybody got something out of it. Chuck and Stray Dog and Medicaid to the moon.
Yeah, let's go. And Chuck.
That's it, Chuck.
Oh, did you? Okay.
Okay. Yeah, I didn't leave Chuck out.
I was gonna say, Chuck too. Chuck's still going to $1, and I'm just telling you, sooner or later, Brett's gonna.
Like I said, if we can just get past that 8 million or so market cap, then it's basically in price discovery again. And I think it can also has the things around it that could resonate with the retail crowd. Kind of the stuff that's around it. So yeah, I still got high hopes for Chuck for sure.
Me too. I've been DCing it, but I had to make a buy on live with you. So
yeah, I appreciate that, Josh. All right, guys, we'll catch you on next time.
Peace.